Good evening, ladies and gentlemen. Today is the 8th of June, and we had an interesting day. We gapped up, got sold into by 100 points, then had a steady uptrend, and then that got sold into. And finally, by the time I exited, we were having a short covering kind of move, due to which I took the exit because beyond that, it didn't make sense to stay in the trade. Overall, it was a break-even day for me, so neither good nor bad. And I think I was quite happy with how I managed a day like today, even though the range is quite small since the prices of options are not even anticipating such a range. It can get tricky to manage the volatility, especially when we head towards the downside. One would expect a profit booking pulling us to 15,500 is completely on the cards, but options prices are not accounting for that whatsoever. Um, all said and done, I think today's video will have more stuff to like go over in terms of how to manage volatility in a day when it's not being priced in, and I hope it's of use to you. Thank you so much for watching, and I will catch you later. Take care.
Want to meet like minded traders and discuss option strategies, adjustments, and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. I have just entered the position for today, and yeah, seeing a dip right at the beginning, which is mainly coming from Bank Nifty and Reliance, both dipping. And the idea for today is I'm going to hold this delta neutral spread and do as little adjustment as possible and more or less keep a stop loss of 5 points. So we'll keep you posted. The idea will be to be delta neutral. The global cues are slightly on the negative to neutral side. So at some point, it's very natural for there to potentially be a profit booking that pulls us to 15,500 at least. The options data will not be overtly visible at this point, so we'll keep you posted. But I'm not going to be rolling down my calls yet because this has been a buy on dips market for a while. So we'll just work with the concept of the market getting bought on dips, even though invariably we always see the same thing. Calls are heavily underpriced. We make an up move and calls double. So I'm going to work with the same continued pattern holding and keep a stop loss of 5 points on the overall spread. The overall spread loses 5 points, then we'll take that as an exit. Okay, so we've seen a steady down move. Bank Nifty has been heading down the whole day, but IT was quite strong. But a single red candle on IT and a continued down move on Bank Nifty has pulled us to 15,700 and almost 35,100 on the Bank Nifty. Now, the idea is I'm going to wait and see if 15,700 actually breaks. If 15,700 actually breaks, then I will move my calls to 15,800. But if not, I'm going to just leave them at 15,850. Yeah, due to the kind of spike in the puts, we are slightly in the negative, but not more than 2 points. So the plan will be to wait and see if 15,700 is actually broken on the downside, wait for the confirmation of it breaking, and then look at risking off on the puts as well as moving down on the calls. So at this point, it will be a wait and watch situation because if 35,000 is taken out on Bank Nifty, then definitely that would lead to a continued profit booking type situation. In which case, the best case scenario is to get out of the put side exposure. Okay, one more thing to add is while there's a lot of calls being added at 14,700 and higher, there's also puts being added at 14,700 and higher slightly. And some of the OTM puts are being unbound and moved higher. So it's not exactly fear of some kind of cascading down move through profit booking, or at least not yet. So that being the case, 15,700 is seeing positions added, and currently this is trading at a value of not too much more than 150, so 150 plus a little bit. And that being the case, I'm just going to continue to keep this position as is. I'm not expecting too much of a downside move. In fact, high probability of the down move getting bought, um, as we've already gotten about 20 points from 15,700, mostly because that's been the kind of repetitive patterns we've been seeing lately. So for now, the idea is to more or less continue to keep the same position. One thing to note in all this is IT sector is looking very, very strong. So both Infi and TCS up, Infi especially. Yeah, IT sector looking quite strong. Another consequence of so many shorts getting built in the system into the down move is a potential short covering. So that always is there. Okay, so what is happening is the weekly options IV is expanding a little bit, wherein basically despite the down move, the calls are not losing as much value as one would think at this point of time. Now I'm more or less at my stop loss situation where I will need a continued down move with these calls not losing much value to be able to more or less be pushed out of the position. I'm down about 5 points now. So um, I think that's probably what I'll do. I'll just take the exit if it looks like we're making a continued down move. I will try to move calls to 15,750 where if the spot heads to 15,675. So that will be a move that I take. But overall, if I start to lose more than 2 points, 3 points from here, then we'll be taking the exit because that would just signify. Also, we're in a slight IV spike. I expect either these to cool off or these to cool off at some point. So, which is why I'm not taking the exit immediately. But if it continues to go, then I cannot sit on a losing position. It's probably a good thing that we're seeing a profit booking session because we've just had a one-way move so far. So anyway, it looks for all purposes like we might be forming a higher low at this point. But one thing that is very evident is a lot of the 14,700 puts also got spooked out of their position. We did see unwinding, at least whatever puts were written in the morning. So what has happened here is that at the dip, many people tried to buy the dip by selling put options, and those guys have eventually started unwinding. So it's the same put options that were built today that started to get unbound, and a heavy amount of call writing at 15,700 and higher. It's quite a large amount of open interest. Yesterday I also had 15,700 on the put option, but yeah, now the calls have taken dominance in the overall open interest as well. 43 lakh calls, 37 lakh puts, but I wouldn't say it's some kind of scramble also. We are not running out of the position. So I'm going to continue to keep this range. It's a 200-point range. And yeah, that's more or less where we are. I'll keep you posted. Okay, so I'll go over what exactly my understanding of today's market is. We gapped up slightly and then started dipping. After the initial dip, many people tried to buy the dip. Okay, so this candle here was buying the dip. Buying the dip didn't work out. We then broke the day's low. Anyone who tried to buy the dip, very quick and in and out type traders, they decided to exit, right? And here multiple shorts started getting created, multiple shorts in the market. We dip further, that's why you saw initially some amount of put writing at higher levels and then all of that getting unwound, right? More or less, you can see that. Look at this light blue line, this 15,700 put option went up, people tried to buy the dip, got spooked out, got out of it, and now slowly building up, and 15,700 straddle is building. Now what is my idea here is that now that we've taken support and start hitting back higher, a potential short covering could actually propel us back to the 15,750 range. That is what I'm afraid of. These calls blowing. I'm not so concerned about these puts. Now I'm sort of stuck in a situation where at current pricing, if I roll up my calls to risk off on the calls, it won't really matter because these calls will also get covered to the same extent as this in case we have that up move. So more or less the idea is in case we start seeing an upward break, don't need for a wait to see whether we'll continue breaking on the upside. We'll have to get out of the call side, break the trade, probably be short just the puts, and then try to time re-entry into the call. So that's more or less the plan at this point of time. Okay, so in line with expectation, these calls are now starting to gain, but the puts are overcompensating because the IV spike was on the side of the puts. Obviously, that benefits, but it won't benefit for long, and it certainly will not benefit if these blow up to 40 plus. So my idea is I will wait for these to expand to something like 42. which now there's a high certainty they will expand to 42 plus if we make a move up to 15,740. So they will expand to that level and higher. At that point, I will get out of the 15,800 calls and sell the 15,850 call, which hopefully at that point should be trading at something like 26.5. 3 points will be lost here, and this would have gained by 2 points roughly. So that's provided execution wise there's no mistake. That should be the way this pans out. At that point, this should be trading at 31.30 best case. We'll keep you posted. Time is 11 o'clock. Of course, since the setup is now looking clearly bullish after the dip, where we are seeing higher high, higher low, it might also not happen. So we'll keep you posted. Okay, so what I'm deciding to do a little preemptively is I'll move half the calls now. I'll wait for some kind of a continued expansion to move the rest. Okay, half the calls have been moved. So can somehow avoid a slight explosion here in case we have a pullback to 15,750. And yeah, the other half I'll wait for 15,750 to actually be tested to move. It puts me in a pretty good position. Okay, so I'm taking a trade now, which is called a bull call spread. You'll find videos on this group about what a bull call spread is. I'm buying the month end bank nifty 35,000 call and I'm selling the 35,500 call. Now what this does is basically gives me I have to pay a debit for this. My risk is limited, my profit is limited. So max profit 60,000, max loss 64,000. Of course, more or less what my plan for this is going to be. If 14,800 on the downside is broken, then I'm going to exit. So I'm going to break the trade at that point. There are different ways to manage a bull call spread. But since it's a debit, what I'm going to do is I'm going to try to break the trade and make it a bear call spread, keeping 35,500 as my short strike. More or less many approaches to it. One way of doing it, you can just set a stop loss on the trade. So you can be like, okay, at this position on the spot, I will exit the trade. If you want to manage it, you can manage it, but setting a stop loss on debit spreads is probably a very good approach as well. Done. Why am I doing this? Because where's the bank nifty chart? Yeah, so bank nifty 35,000 has a very high chance of acting as a good support. Today we had a nice dip, right? So here, see, we've seen that this was previously a resistance, now a support. Since we've had such a large dip, by taking this position, I'm basically buying the dip. And how I manage a debit spread if it goes against me, I'll show you the course of the videos. So, anyway, this is our trade. We have purchased the 35,000 call and sold the 35,500 call month end. We'll keep you posted. Time is 11:11 now. More or less that upside break that I was afraid of did not come, and the calls have started cooling off. If we once again start breaking below 15,700, these calls which were moved up in order to protect against the explosion here will be moved back down. They were moved up to protect against that, since that is a non-event. Eventually these puts might need some kind of protection, for which this switch will be made. Okay, one change to the positional trade is I'm gonna exit Larsen 1400 put and take in a little additional credit from something in this month on, because this up move persists, continues to persist. Of course, now my cover is still out of the money and it's in July, but it offers me the ability to take a little more. The time is 11:40, and right now, basically, finally at the end of the day, we've come to some kind of break-even situation, and yeah, we'll keep you posted. We'll continue to hold this position as is. The plan is, in case we break below 15,700, move all these calls back down. In case we start heading higher, this expands to 42 plus, then get out of this. Okay, the threat of short covering up move is quite high, so I am going to take some directional risk. And now Reliance is making an up move. That is my main concern. So I'm going to become slightly directional here. Not too much slippage in that change. Yeah, I've exited all of the 15800 calls and move to the 15850, keeping my puts at 15600. So now a down move exposes me a little bit. I mean, what the problem is, a 50-point spread on the call side is giving you something like 15 points, whereas the put side is about 10. So to balance this, if I move these down to 15550, that'll be a nuisance. So anyway, there will be, if there is a pull to 15750, these calls will also expand quite a bit. These puts initially won't lose value, but eventually they will have to, because there's a down move there. At least about 4 or 5 points on the puts will be protected easily by these calls. Yeah, see, this is the call expansion, call explosion that we're seeing now, that short covering push. So I think I timed it more or less fair enough at 40, 41, 41.6. But of course, the same expansion will happen on the OTM calls as well. Calls, when covered, they will be covered across the band. So regardless, this is a pretty comfortable position to be in for now. Currently, this strangle is trading at about 55. So potentially could expire under, not expire, now close the day under 50. So more or less in line with that will also be my uh, stop loss situation. But I'm not expecting too much of an up move unless the short covering gets really bad, because we've had enough time for shorts to get covered. We've been in a higher high, higher low pattern for almost about 2 hours. So that would have given enough time for people to get out of their position where they don't have to rocket out of these immediately. Okay, in a situation where the higher low trend line is breaking, and I don't want to sit on a spread which is even mildly directional in such a situation. What I'm going to do is risk off on half the puts since the trend line is breaking. And if we break 15,700, we'll move down all the puts. So I have moved half the quantity of put short to 15,500, and we continue to trend down, we'll move the rest here. The time is 12:10. We're seeing a dip mainly from Bank Nifty and Reliance moving together on the downside. Reliance still staying above 2200, and Bank Nifty has just dipped below 35,000. So to some point, risk off on all the puts, moving them to 1550. But even then, with the kind of expansion that they're undergoing, is not being compensated by the 15850 call. The reason it's not being compensated is, as long as we stay above 15700, there's always expectation that the dip gets bought, while the fear on the people who sold puts is definitely spiking. So IV spike more or less. And I mean, as long as the breakdown of Bank Nifty is not immense below 35,000, and Nifty also is more or less holding on to 15,700, I'm comfortable sitting through this IV spike, because there's a good chance that Reliance finds support here, Bank Nifty finds demand. And anyway, so it was one of those situations where it looked like a potential upside break. Everyone was probably on the same page, which is why there were a lot of long positions. And the moment that break, more or less, you can look at this trend line. So you see a trend line here, this one. Once that broke, all the longs that were built up just started unwinding. So, which is exactly why, since it's a long unwinding sort of situation, I'm expecting there to be supply at the lower sides, especially on Reliance and Bank Nifty. IT is pretty much flat. Yeah, the Bank Nifty trade is positional, and I'm not going to do anything to it right now. It's still in the dip has been purchased situation, and it's hedged. It's a limited loss trade, so I'm going to keep it as is for now. I'll keep you posted. Time is 12:11. 3.5 hours left to go, and not planning on making any changes to this position unless we really start breaking down below 15,700. Okay, seeing a big up move, which is crashing the puts, not particularly yet started covering the calls, but going to get out right now. Big break over the intraday swing. Cannot afford to sit in this. Okay, just exit the hedges. I don't want to sit into some kind of uncontrollable move that burns me. It's more or less the day. I think it would have been a better day than break even had uh, the early morning swing. I mean, it's invariably the worst possible day to strangle when you have a gap up and then that gap up gets sold into by 100 points when the premiums are what they are. Move isn't the problem. Move when the market is not expecting a move. It's not pricing in a move is a problem. Anyway, it doesn't make sense. So the way I would summarize the entire day, I'll just go over the chart. It's more or less a break even on the trade. Okay, so let me summarize what exactly happened here and why I exited the entire trade. So this is how I look at basically what happened during the entire day. I've shared my auto group book in Telegram in case you wanted. Okay, let's look at it this way. We gapped up, right? We gapped up towards yesterday's high. From there, saw immediate selling. Right? This is basically profit booking because now suddenly Qs are not that great anymore. Global Qs are mildly negative, so we start dipping. Started dipping towards yesterday's close. Now, yesterday's close is always a very good price action level. At this point, you can say there was buying action. People tried to buy the dip. But since that did not sustain and we continued to move down, now these guys who bought the dip here are further unwinding, leading to a further cascade. So we dropped almost 100 points in the first 25 minutes. First 45 minutes of trading. Here, once there were shorts created along with longs that got unwound, that basically led to the trigger of why we started slowly covering the shorts through the day. Post that, once again, we were coming to this confluence point of where yesterday's closes as well as this action took place today. From there, we saw selling. And this time on the retest, the potential guys who have shorts, because there were large amount of shorts built up in call options in the morning, they got spooked out and had to cover, pulling us over 750. Now we're seeing a rejection of this, but this can potentially go all the way up. This is what people, the technical guys, will call W pattern. I don't look at it in terms of patterns. I try to look at what is happening in the mentality of people who are buying or selling at different points, and this is how I see it. I could be wrong also, but I generally work on this kind of a hypothesis. So at this point where we are breaking yesterday's close as well as this rejection point, you can't look at it at a specific level. This zone, it doesn't make sense to stay in this trading mode because of the kind of call option short positions built up. For example, let's take a look at the call 15850 call that I was short. I was trying to exit this at 25, but by the time I exited, got at a slightly higher price. This is going to only go up. There is no way that it is less than 100 points away when we make a move about 15750. There's no way it trades under 25, especially when there are already so many shorts built up and the fear of continued short covering is there. So that's more or less why I took an exit. Secondly, today is a Tuesday, so it's not exactly completely in my favor to be in the trade to begin with. So that is that. Thank you so much for watching, and I will catch you tomorrow. Have a great day, and I hope you had a good trading.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.